The last document I want to talk about is the Excel spreadsheet, so student tables for a business with no GST. When you open the document, some computers will show this security warning and saying that the macros have been disabled. I suggest that you enable the macros because they allow ease of navigation through this document. On the welcome page there are hyperlinks or macros that will take you through to the different pages within the spreadsheet. The second tab is the introductions and explains in a clear way how to fill this spreadsheet in, or how to fill the documents in this spreadsheet in. Typically you're looking for yellow cells within the document, which is where you'll be entering data. There's some warning systems set up within it that remind you of where to put your data, and some simple information if you need to unlock the spreadsheet further to change information. The key page that you will go to initially is the data entry page. And it's a simple 3 or 4 step process. Step 1, enter your business name, enter the correct date that you'll be starting your business, and if there is your business is a partnership, also enter your partner's business name. The spreadsheet allows you to calculate your PAYG obligations now that you are not being employed by somebody else, and you're employing the business is paying, will be required to pay your tax. So as you see here, we have a recommendation of at least 20% be put aside, so at the end of your tax year you'll be able to pay your PAYG tax obligations. So in this yellow cell, simply enter the percentage that you will be putting aside, and that will will go into the spreadsheet and calculate that for you. We also suggest that after year 1 there will be some momentum into year 2, and we suggest that you punch in what you think might be your percentage year growth year on year, and that will help populate in your year 2 numbers. We also assume that your expenses will go up from year to year. Current GDP, or gross domestic product, is around 4%, 3 to 4%. So we suggest that you put in some calculation for your year 2 expenses to increase. It's a yellow cell, so obviously you can enter whatever number you can choose to. Step 2 is all about setting up your pricing and product structures. So whether you be a product business, a business selling specific products, or you're selling a service, the same format applies. So whatever your service is, enter the name of it, or your product is, enter the name here, and continue across the page as required. What is the sell price for your service, and enter the applicable number here in these yellow cells and continue across the page. Now for each product or service there's usually direct costs, and these are strictly costs related to your to selling of that product. So we enter those here, and enter an applicable amount for that. So once we've added those numbers in, this information will be transferred into other parts of this spreadsheet. Next part is suggesting the number of units you think you might sell per month. And it's simply a matter of entering that data. So this information will be taken through to the sales year one and your P&L spreadsheets in a few minutes. I'll show you precisely what I mean. Moving into step 3, cash flow. What you need to do here is enter your monthly expenses or annual expenses, any loans, any other income that may be applicable for your business. If you're seeking a loan to start up your business, enter the details here. If it's not applicable, leave it as 0. If you're putting funds into the business to start it up, then you can either enter it here or a little bit further down into your bank account. The monthly cash inflows. Now, if your business has for example, it's a shop front, your business is a shop front and working from a shop front that you own, you sublet part of that shop front to another retailer, they're paying you rent on that, then that's external income. If you have a warehouse or storeroom that you own and will be using for your business and you're subletting some of that to another person and they're paying you that rent, then that could be deemed as other income and therefore should be recorded here. They are the only examples that I can think of that may be applicable to you. So I would suggest for most new businesses entering NICE that's not applicable, so leave it 0. This monthly cash outflows section is all about your expenses for your business. So these cells here are all yellow. That means they can be edited. So if these headings are not applicable to you, change them to what will be applicable for your business. And we're talking about your weekly, monthly, annual expenses. So accounting fees are probably going to be an annual expense. So putting the number, the fact, and for each of these frequency a column, for each of these there's a drop down menu and you can change it to annual. And finally in the first column it is what is the first month of the year that you'll pay this amount. So you need to select each of these to make sure that it's correctly representing when this expense will be occurred and how often it will be paid. So you continue through editing accordingly, making sure you change the month to the first month that you will actually be paying this expense. This information will be pulled through to your P&L and cash flow pages as you enter it, and we'll see that in a moment. So we just put in the numbers applicable. Obviously, with all NICE businesses, we strongly encourage the business to have its own business bank account. Most banks will have a simple business bank account that you can open, and typical charges are around about $10 a month. So you need to factor that in. Unless you're planning to have significant amounts sitting in your bank account, there's probably 0 bank interest earned. Unless you're looking to employ staff, then there's probably 0 wages that you need to calculate for. The next item is drawings by the owner. So this is in essence the money that you hope the business will pay you on a monthly, quarterly, or annual basis to help you pay your personal living expenses. So when will the business pay that? When will it start paying that? Being realistic that in the first 3 months of the business that you probably will be struggling to have sufficient income for the business to pay you. If the business has loans, and we're talking about business-specific loans, not personal loans, then that information needs to be entered here. So if we go back to the top of the page, we need to enter our business name, and we need to make sure that we enter the correct starting month and year. So let's make our starting month August. We've entered all the data here, so let's go to the next tab and see what's happened. So Service 1 at a charge out rate of $100 has been brought through. Service 2 at a charge out rate of $150 has been brought through. Now we need to project our sales figures. So how many of these services will we genuinely think we might sell per month? And if I put 10 there, for my starting month, I'm probably being ambitious. Things to consider when doing your sales forecast is, firstly, the first 3 months of your business, you'll be working very hard to just let customers know that you've got your doors open. So keep your projections simple or conservative, because it takes a while for business to grow. Sometimes for businesses, depending on what your jobs and services are, or products and services are, the holiday season is a slow time. For other businesses, it's a peak time. So make sure you're taking the seasonal considerations into consideration when you project your sales. Sometimes of the year, like June, before a budget, some businesses tend to not spend. So is that applicable for your customers? And if so, make sure that you're projecting accordingly. So this is simply a matter of putting your projections in right across the year and being relevant, being conscious of what the seasonality might be. And obviously, as more customers get to know you, they start referring you on. Hopefully your business grows and your sales continue to grow as well. So it goes right across the year. And depending on how many products or services you continue to fill these numbers up. And your spreadsheet will ultimately give you a total at the bottom of the projected sales for that year. Given the information you put in as far as your direct costs into the data entry page, it will also calculate your direct costs and give you a gross profit figure. So we only enter into the yellow cells, and the formulas behind the grey cells continue to do their thing. So that's our sales forecast for year one. We need to look at our cash flow now. So the spreadsheet has taken through the sales forecast numbers and populated them here. It's worked out our material costs, and it's looked at the simple expenses that I've put in. Obviously, I only put a small number in, and it's taken into consideration the bank charges and the fact of owner's drawings. So it tells us we've got a cash for this first month, a total outflow of $1,927, and we've only got income of $1,300. So therefore our cash flow and cash balance is negative and continues across the year. So not enough income, too much expenses. This needs to be fixed up. The great thing about these spreadsheets is you can continue playing with this until you have numbers that, one, are realistic, and two, project something that's viable. If we come through to the next tab, your P&L or profit and loss for year one, again the information has been brought through as for our sales, as is our expenses, and it's starting to show us our net profit after tax, so less the calculation of the PAYG. Technically it tells us that we have 18,000 in sales, total expenses of 1,600, and therefore a net profit of 10. But if we go back to our cash flow, the reality is we don't have that in the bank. So our profit and loss is a really important document, but our cash flow is just as important. We've looked at year one sales projections, our cash flow and our profit and loss. A quick look at year two. It's a matter of going through and once again entering our projections, taking into consideration seasonal aspects, and tweaking our expenses for year two to get a profit and loss for year two. And all of this is done by formulas sitting behind the spreadsheet. You just input into the yellow areas and that's it. The spreadsheet will provide some analysis at the end. Once all relevant data is in, it should make some sense. And this table will actually be cut and pasted into your business plan performer once it's finalized. It'll also provide us with some graphs of our sales flow year one, and when we enter sales year two data, it will also show that, and will give us a graphical view of where our expenses are. So there you are. Student tables are an awesome spreadsheet tool for you to develop your financial data for your business. The fact that you can change, edit, and play with your numbers and allows you to start developing a realistic picture of your business, and therefore getting some realistic projections for sales targets, realistic cash flow picture, and realistic profit and loss pictures. All these documents are available as downloads from this unit BSB SMB 301A, which is the Investigate Micro Business Opportunity module or unit. And as said at the beginning, these are the documents you must use when developing your business plan. Thank you, and I hope that was a worthwhile tour of these great resources we provided for you.